Welcome to the Personal Pension Radio Podcast, where you get unconventional insights into wealth building and retirement that actually work. Discover data-driven strategies and learn from a wealth of experience so that you can take your retirement to the next level. Now, here's your host. He was once bitten by a harbor seal, the income engineer, Kraig Strom.
All right, here we are back on Personal Pension Radio. If you haven't already gone over to personalpensionradio.com, get on over there. If you haven't left us a review on iTunes, what are you doing? Get right over there. Pull your car over. Pull your bike over. Drop that return in on iTunes. Thank you to those who have actually left some really great reviews on iTunes. I'm joined in studio, Luke from AssetMark. Tell us how we pronounce your last name so I don't screw it up.
Nordrahaug.
Nordrahaug.
Easy
Where
one, right?
in the world is that from?
It is Norwegian.
Norwegian.
I hail from Scandinavia.
Scandinavia. Get very good. I like that. No, very cool. Well, we are again back here in the studio. With the studio now is mobile. Remember, we're no longer broadcasting from our previous location. We are now broadcasting from Mr. Foley's van down by the river. Thank you to Matt Foley, motivational speaker extraordinaire, for letting us borrow his van. It allows us to stay mobile. We can be in different locations all the time. We are, of course, brought to you by personalpensionradio.com. Thank you to our listeners. I wanted to do this again because it's so exciting, the reception that we've gotten from the show. We actually have listeners from California to Florida, Texas and New York, and Pennsylvania. So we've got listeners all across the country, but I wanted to highlight California, Florida. These are the two states where we have the most listeners. We're head-to-head with California and Florida. So listeners in Florida, you are a little behind. You're going to need to share this with all your friends. Really get that out there so you can catch up with California. And also hello to our friends out there in Pennsylvania. International listeners, Ontario, Canada. Hello, hello. And Alberta, Canada, home of Banff, one of my favorite places. Not sure if you've ever actually been there.
Looks beautiful.
Oh, it's just one of my absolute favorite places. And all the way out to the United Kingdom, Sweden. My genealogy, my wife tells me I'm Swedish. And hello to our listeners in China. So we've got listeners all around the globe and across the country here. So before we get into this, a quick disclosure. So remember, don't act on advice that you hear on the radio or television or on a podcast or even this podcast unless you have actually sat down with someone who's qualified and licensed. That's an important thing. Meet with somebody that actually has the licenses, the certification, the oversight to be a top quality financial services advisor to you. But don't act on advice that you hear on the radio. Go to personalpensionradio.com, sign up for a consultation. We can do consultations over the phone, over the internet, and in person. So definitely do that. Now, remember that Personal Pension Radio, we are all about bringing together the experts you need to go up your retirement mountain, saving, accumulating wealth, but also to get to the top where you can actually start distributing your money, where you can actually start living and enjoying the lifestyle that you hoped for. So with that, I'm going to get back to introduce Luke, let him introduce himself a little bit. And I've invited him here because we've actually, at this time of this recording, we've had one heck of a ride in the market, yes?
We have. It's been an interesting couple of weeks and months.
Yeah, it's been kind of, I won't say shocking for insiders that are in the industry, right, that it wasn't shocking. It was kind of expected, and it is just kind of a normal par for the course, right?
Yeah, I mean, all you have to do is read the latest headlines, and you kind of anticipate what's going to happen with the market. You hear about interest rates going up. They don't necessarily go up with bonds, but yet you hear about it, and that's enough to trigger market decline. Right?
Yeah, sends everybody into a tizzy, right?
Sure
Before
does.
I get into it, I always like to ask when I can remember, what is your favorite quote? I asked this of Luke already, but and I love his favorite quote, one of my favorite quoted people.
Yeah, this is one by Warren Buffett, who I'm sure some of your listeners know of. The quote is, "I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful."
Outstanding advice. That is actually outstanding advice. You know, don't move with the herd. All right. And we talk about that all the time.
I think given everything that's going on the past couple months with volatility and the international markets, what's going on with the Fed, we want to be mindful that this is some of the short-term noise. We understand that people are fearful. That might mean, hey, there might be some buying opportunities out there with what's going on in the international markets. And there might be some buying opportunities here coming up with what's going on with bonds. So
exactly. When other people are fearful. And now that's so much more, it sounds so much more professional than my favorite quote, which was when a reporter asked Warren Buffett, why don't you own a yacht? And Warren Buffett says, I have friends with boats.
Those are the best kind of friends. Just got to know someone.
I don't need to own a yacht. I've got friends who have boats.
Exactly.
That's fantastic. Well, tell us, is there a family there with you in San Diego, right? You live down in the San Diego way?
Yeah, sure do. I have a wonderful wife and 2 kids. One little one that's just 1 year old, and another daughter who's 3. So I got my hand full at home.
Oh my gosh, your wife has her hands full, right?
Yes,
and the little one is going to start catching up and seeing the 3-year-old fly around the house, so you're going to be in trouble.
That's right. Coming up soon. It's a busy time.
There's going to be Pooh Bear outfits with leashes on, right?
Yeah, I think that's my Halloween costume coming up in a couple weeks.
That's right. Oh, really?
Yeah.
Now, funny story, I actually don't make the same mistake unless you choose to make an informed decision. I thought I would be the dad with the most. I'd be like, cool, Dad. Madeline was 3 years old, and she said, what are we going to be for Halloween? And I blurted out in the car, you choose. You get to pick our costumes. Oh, yeah. And we went to the costume store, and the next thing you know, I'm wearing tights. I'm Prince Charming.
Oh, wow.
Oh, yes.
Oh,
she's
she got
Snow
her
White.
Choice.
And I'm wearing tights and a frilly outfit, and she is my little Snow White.
There you go.
Yeah.
That'll go down in history.
Yes, it does.
It's going to go on your photo album. I haven't been there yet, but I'm sure that's coming up soon.
Just be careful what you offer up. So
exactly.
We had a deal that every other year I got to be something hideous. I got to be something scary. She could still be something cute and cuddly. So every year I'd be something cute and cuddly. Then the next year I'd be something hideous. So
there you go.
That was my balance, right? So now, when you're not wrangling kids and traveling throughout Southern California as a road warrior, do you allow yourself any hobbies?
Yeah, for the couple hours of free time I have here and there, I do have a few. So I actually really enjoy mountain biking.
Very good. So you're one of those crazy guys that goes up the hill in the truck and then flings yourself down the hill?
Yeah. I try to actually get uphill on my own, but I haven't been to the ski lift yet and done the whole downhill thing. But yeah, I just find it nice to get out there, get in the desert, and just ride, see what I'm capable of, climbing mountains, and just kind of a nice little time off. I also love just the outdoors in general, hiking. Camping, being...
Is your wife a camper?
She's going to get into it.
She's going to get into it?
A few here and there before the kids, and now post-kids, it's hard to find time, but I feel like pretty soon we're getting into the camping mode.
All right. Now, there's another adventure. See, Madeline wanted to do the camping thing in an RV. She wanted us to live in an RV. Like, she saw her first recreational vehicle when we were with my father picking out something for his truck, and she thought we should live there. And she understands now why that was a good idea that we didn't end up living in the RV.
Down by the river?
Down by the river next to Matt Foley, I tell you what. Exactly. Exactly. Well, good. Now, as we come back to this, give us a description professionally now. You are with AssetMark. Give us a description of AssetMark and how you came around in your career to ultimately connect with AssetMark.
Sure. Yeah, so AssetMark is an institutional asset management provider.
See, that sounded really technical. Yeah, institutional, that sounded really technical.
Yes. So what we do is basically we seek out the best institutional or large firms that can help advisors connect with different capabilities for their investors.
So in investment firms, like you're saying, like big Wall Street type investment houses, things like that?
In some cases, yeah. So firms that are maybe well-known in the industry, that are household names, that have great asset management capabilities, all the way to small boutique firms that maybe aren't well-known, at least not for most investors, but are well known in the institutional world.
Gotcha. That's it. This, by the way, again, with all of the volatility and all of the turmoil that's happened in our financial markets as of late, this is a great conversation that if you have questions, send them in through personalpensionradio.com. You can use the contact us there at the website. Send us the questions. If you have a question for Luke specifically, we'll give his contact information, home phone number, cell phone, all that stuff at the end, right?
Sounds good.
Gotcha. So how did you end up, with AssetMark? What was that drew you there? I mean, because this is a very technical business that you're in. Luke makes it sound simple when he shares this information, but the selection of money management firms and investment options is virtually endless. I mean, it is absolutely endless. So how did you ultimately gravitate to this direction?
Well, I think it starts with my background. I've actually spent some time out in retail space working with bank clients and investors individually. And then I spent some time both working with annuity companies, and now AssetMark has been the fee-based company that I've been working with for several years here now. I think what's really unique and what makes my job exciting is that we're not limited to one single method of asset management, one single asset management firm. Because we have such a vast array of options, every conversation I have is really different. So, if I'm speaking to you about particular asset management capabilities that work best for your client base, it might be completely different from something else someone is doing down the street. So a lot of range, a lot of options. We actually work with 18 different institutional firms today, and each one of them has something unique that they're bringing to the table.
Now, when you say institutional, are these some of these firms the kind that just your average investor type person cannot just walk in the door and go work with those firms? Is that what you mean by institutional in some cases?
That's correct. So it's the private client space. This is the space where typically $5 to $10 million minimum will get you a single model. And with the leverage that we've built up with all these large firms, we're able to give the average investor access to the modeling. The same modeling that a client with $10 million would have at a much, much lower minimum.
Gotcha. See, that's a key there, is that I've heard it many times, actually. I've heard clients of mine, I've heard prospective clients, I've heard a variety of people say it over the years. Oh, well, that only works if you're rich, or, oh, well, that only works if you're so-and-so. I can't do that. The rich have this or they have that. I guess the key takeaway here is that it is not the exclusive domain of the super rich or somebody that has $5 million in investable assets.
Correct. Yeah, I think what we've realized is that the endowments, the pensions, all the capabilities that these large institutional spaces have had dominate for decades, they really work. There's a lot of great capabilities there. The problem is the average investor hasn't had access to them up until the past couple of years. So that's really what we're bringing to the table, is allowing clients to get access to something that it's been done for a number of years, but just not available to most of the retail investors out there.
You actually said something in there that these large pensions and endowments, by that we mean like big charities like, University of Michigan or, or a hospital group, things like that, these big charities, that they've had success with these strategies, these great big companies that we think, oh, there's no way that I can have the investment plans that they have. And yet they have had success. They have had a track record that I'm wondering if you would attribute this to having a program that eliminates that emotional bias and that emotional reaction. You had referenced at one point a Dalbar study that the average investor is really at a disadvantage for one particular area.
Yeah, the Dalbar study is a well-known study that goes back over 40 years, looking at really it's the emotional side of investing and looking at investor behavior. And what it shows is, over the past 20 years, the S&P has consistently outperformed what the average mutual fund equity investor has done. So what that means is the S&P, being a U.S. stock index, versus the average investor that is holding 100% stock mutual funds has continuously underperformed. The S&P has done 9.85% over that period of time of 20 years, and the average equity investor has done 5.19%. Now, why is there the massive difference there, right? That's always the question.
Yeah, that's a big question for me. When I heard this, it really is just a giant eye-opener, because the difference between 9 and 5% is not 4 points. Mm-hmm. It's a huge swing. I mean, It's a big, big difference. And so how do they attribute that? I mean, what is that difference between the Standard & Poor's at 9.85 and the average investor at 5.19?
It comes down to human behavior. It's really that average equity investor getting in and out of the market at really the wrong times. Sometimes we go through the whole cycle of emotions, ranging from caution to greed to denial to then despair. We go through this. It's just the human psychology. And what we've noticed is the folks that have undisciplined processes to their investments tend to get in and out of the market at the inopportune times. And that is why there's a major difference there.
So that discipline that a company such as AssetMark, for example, brings to the table, that disciplined investment style and approach, allowing you access to these options, brings that discipline perhaps for those large institutional firms. That's I guess the message to take away is that these large institutional and very wealthy individuals are following a plan, removing that emotional component as much as possible.
Yeah, it's really making it a science, trying to make the emotions of investing a science. And it's hard to do. And we can, we have to attempt it. It's not perfect all the time. But what we've noticed is that if we have a disciplined, documented approach and different ways to manage volatility when markets are tough, we see the emotions significantly drop and investors stay invested. And that means we're getting better returns in the long run.
Yeah, it's actually, I see it all the time. And I actually just recorded a podcast episode just 2 episodes ago that one of my clients panicked. The market crashed, and they panicked, and they were all upset, and they thought now is the time to buy gold because they heard that they should buy it on the radio. Right. And there you go. Remember what I say in my very first disclosure: don't react and act on things that you hear on the radio or on TV or on a podcast. And sure enough, she had purchased gold. She was going to have a 38% increase to break even on her gold purchase. And we were able to get that canceled. But the whole idea that what Luke was referring to is this emotional piece, that if we can insulate from that, it has a huge advantage.
Right. And that's just something the average investor, and even myself, I can relate to that, in my own portfolio, is we're constantly looking at the market, and we go in and out of feeling good about it and not feeling good about it. And so if we've got someone that has an extra set of eyes, someone that is constantly watching it, and someone with a lot of expertise, with capabilities around the world, that is consistently watching it on a daily basis, there's some comfort there.
Yes.
Right?
Yes. We had an interview with Kraig Israelson, a professor and author, and Kraig had said that he'll check his portfolio maybe every year or so.
Yeah.
He has to check it for his reporting to his various, institutional places that he does work for. But he said he'd prefer just to check his maybe once a year.
Which is actually hard to do now, because the information is in your face all the time. So it's so easy to pull up your daily value and get emotional.
Yeah, you can pull up your account value on your phone and start getting emotional on the bus. You got to watch out.
Right. So if you can limit yourself to looking at it every quarter, every 3 months, or once a year, that's fantastic.
Well, of course, that can be done if you actually have a plan and have a science to it. What are the unique ways to protect your money, or have your money in a more secure position and work for you in volatile times? Maybe we could talk about that.
Sure. Yeah, I think things have changed a lot since the credit crisis. It's been a big realization for us coming out of 2008 and the industry as a whole. And you really got to be flexible today. There has to be a certain level of creativity and flexibility that maybe wasn't necessary before. And so what we've seen is, to have your money work for you in volatile times, you have to find things that are going to have a lower correlation at times.
All right, that's going to be a buzzword.
Yes.
You're going to have to give me a definition.
All
So
right.
correlation.
Correlation is the movement to a certain index or the market. So how closely does it track a certain index or the market?
Oh,
is
so
kind
like
of
the
what we're
S or
looking
the
at.
Standard
Right.
& Poor's 500, if an investment moves with that, it's correlated.
Right. So if you have a correlation of 1, you're moving to the S&P, you're moving every single time the S&P moves, you're moving in the exact same direction all the time. So that's something that, unless you want to be tied to a specific index, it may not be a favorable thing. So you have to be a little bit more creative. So what we've seen is there's definitely traditional methods of investing that will track the S&P or have a high correlation to the markets, and they do pretty well long term. But what we've noticed is in the short term, things can get a little bit choppy. I mean, just given some of the recent news and some of the volatility we've seen, we know those same strategies that are going to work really well long term might struggle in some of the shorter term periods.
Right.
So we've been looking at ways since 2006 now on how can we enhance a portfolio so some of the shorter term volatility is limited, as well as keeping the long end position in mind. And we've noticed that there's plenty of institutional strategies out there, different asset management capabilities that have a low correlation to the
Right.
markets because they're making trades at unique times, making larger allocation shifts, and finding opportunities where maybe a traditional method would not be able to go to.
Gotcha.
So I think that's how they can minimize volatility in the short run, but also have capabilities there that will meet the longer term objectives too.
It also sounds like that with that kind of a strategy in place, that you are insulating some of that emotional risk that you get from that individual investor. That it sounds like that is a strategy that can help to insulate
Right.
from that. That's the challenge, right? Is that, we all like to say, just let it ride for X number of years, but you can't get rid of the human nature that is very panicky as human animals.
Yeah, I mean it's very tough to just bury your head in the sand and wait for markets to improve. So believe it or not, it doesn't mean that because we're in a negative market or a market that's seen a lot of decline that there's not opportunities. There's plenty of opportunities, but it does require much more research, much more due diligence on the behalf of whoever's making those decisions to find those opportunities. It might mean identifying a specific asset class and really identifying that and having an overweight or a larger position in your portfolio.
Right.
So it's things like that where I can find something any day of the week around the world that probably has a lower correlation or is not really vulnerable to the news that we're getting over here in your standard U.S. markets. I can find that anywhere in the world. So that's something firms that we use will rely on.
That's, I guess, what you just said. The key is, yes, you can plop yourself down in front of your computer or your laptop, right, for 8 hours a day, and you can find many different options that are moving
Sure.
in the right direction or their opportunities. But that again comes back to the idea of having that professional management and access to kind of what the olden days. Olden days, we've talked about it before. People used to have pensions. You would hand over a block of your money. You would not see it again for 20 years, and it would be professionally managed by a team of presumably non-emotional professional individuals
Right.
to grow that money,
Mm-hmm.
and then they would pay you a pension. Right? So what you're talking about is not only taking away the emotional component by allowing professionals to do their job, but being able to be out there with their thumb or their finger on the pulse of all those opportunities.
Yeah, and I think it's you bring a good point there. It's kind of setting up your own pension in a way. In theory, is just like those large pensions have done for years in using different research methods, using different diversification methods out there. That's essentially what we're trying to accomplish with the platform. Is let's give you the same kind of capabilities and allow you to have institutional firms working on your behalf that have people in abroad and emerging markets, developed markets that are sitting there day in and day out that are tracking the market because it moves so quickly. You do really have to track it on a daily basis.
Yeah, and you were talking about these firms that might lead into this next question that I had from you. Is that how is the platform at AssetMark different than most other third-party platforms out there? How are they different?
Right. Yeah, I think the big term that we should throw out there today is open architecture.
Okay. So again, I see another technical term that my head's starting to hurt now.
Yeah. Well, I'll make it simple. So open architecture means a platform that is accessing multiple asset management firms. So firm A that is doing one method of asset allocation and firm B that's doing a different method, and really being able to have more than one. A closed architecture is one where it's just a single firm doing a single asset management themselves. So they're making all the buys and sells, the trades in the portfolio. So our platform is really, it's built around third party, this idea of using outside parties, using open architecture, which means we're going out and we're identifying what we feel are the best asset management firms in the world today and putting them together in a central place. Where you can access and you can pull from those capabilities for the different investors out there.
And again, giving average investors like myself, for example, giving them access to an above average collection of money management opportunities, right?
Correct. Yeah. So if I liked, what a JP Morgan strategy does in the institutional world, I can get access to a JP Morgan strategy, State Street, Eaton Vance. These are big institutional names,
right?
Where normally I could see them. They manage plenty of mutual funds out there, or different funds in the retail space. But I've never had access to the institutional world, where that same firm is also doing big money, managing large portfolios, and using some of their own funds or using some other outside funds. And that's where we're seeking them out. We don't own these firms. We're looking for what's out there and what are truly the best capabilities, whether it be active management or passive management or a variation of those.
Right. Being able to, but again, having access when you take, you mentioned a company, we'll say Eaton Vance.
Right.
I mean, Eaton Vance is a large investment company.
Correct.
And when you have access to their private client side, their high net worth side, for example, through this open architecture,
right,
I'm guessing that you're also getting a huge amount of their resources applied to that investment strategy, that whatever it might be that you're using.
Correct. Yeah, I think there's a certain amount of scalability there because we are a large firm, and our AssetMark is a $30 billion firm, or close to $30 billion in assets currently. So we are a big client of theirs, and so it's really leverage and scalability when we go talk to an institutional firm to help with an account that's, say, $50,000. We are actually getting access as though we are a $1 billion investor of theirs.
Nice.
Because of the leverage.
Yeah, and see, that's something that you can't access. That if you were to buy, I'm guessing an Eaton Vance mutual fund, which you can purchase at any number of brokerage firms all around the country. You can buy it all around the world, I suppose.
Right.
But you'll never get the Eaton Vance investment team. You'll never get the international bond desk. You'll never get all of the various resources that go into a private client account.
Correct. Well, unless you had 5 to 10 million. Right?
Oh, right. I keep that account offshore.
Yeah.
Shh, don't tell anybody.
Right. But yeah, that's very true. For the average investor that we've seen out there, they are not able to get to those, and that is something that we feel like should be available to the masses. The average investor should be able to get institutional discipline and institutional methods of investing. So that's what we want to bring to the table.
Yeah, I really like that. I mean, that's the part that I like so much about this conversation is, again, it goes back to this is not the exclusive playground of the rich anymore. It used to be, 20 years ago, maybe even 10 years ago, but 20, 30 years ago and beyond, these types of investment options were the exclusive playground of the super rich and the very wealthy.
That's true. Yeah,
right?
you look at how these capabilities were popularized, it was through those large firms for decades and decades. And, it really hasn't been talked about until we've truly needed it coming out of the credit crisis, and we see the value and we see what these large pensions, endowments, and other large entities have done to manage through that. And in some ways you want to duplicate to some extent maybe some of what they're doing. And so that's what's unique here.
Absolutely. No, that's great. What's the biggest value when you look at this conversation? What's the biggest value that an advisor can bring to the table when accessing these kind of institutional portfolios? Because I'm guessing once again, though, that the average person can't just walk in and open up an AssetMark account. They have to come in with an advisor.
That's correct. Yeah. First and foremost, we only work with independent financial advisors. So it's a certain group that make up what's available out there for the retail clients to get access to. So they do have to channel it through the investment advisor. And the reason being is there's a lot of capabilities on our platform. We have 18 different institutional asset managers, a lot of options, a lot of range. And we don't know the individual investors as well as the advisor does. The advisor plays the role of understanding that investor, what their objectives are, what their risk tolerance is, what are they trying to achieve with this portfolio? And then really our platform is the access point with which to accomplish that. So they can go in there and figure out which firms align best with the clients and to achieve that objective. So I think what advisors are bringing to the table is the planning aspect, the understanding clients, the managing the emotions, being able to look at the portfolio and explaining what's going on in it, why it's done something, why it's not done something.
Right. That's
and
one
understanding
of the, that's one of those roles was not in my certified financial planning handbook, which was the psychotherapist.
You didn't know you're going to be a therapist as well.
I didn't know I was going to be a therapist, marriage counselor, crisis counselor, all of those various things.
That's right.
But it is important to note, it goes right back to the disclosure and the things that you've heard us say, is that the role of the advisor, and more specifically, because we've been kind of, our last podcast episode, we talked about this a lot, a licensed, certified advisor, someone who actually has oversight from regulatory agencies to protect the general public. These are the types of advisors that can give us access to options and opportunities like AssetMark. Is that fair to say?
That's correct. Yeah. I mean, it's exclusively for the independent advisors, which, are thousands of professionals around the nation, but we do not work with particular channels like, a bank channel or wirehouse channel. It's independent advisors that are investment focused or have investments as a large part of their practice. And yet, we don't necessarily want the advisor to have daily asset management capabilities, because we are a platform where the advisor can rely on a lot of the investment capabilities and research that we put together and really monitor that account at a higher level, be more of the architect for that financial plan, and get access to these different tools that they can put together in the toolbox for the client.
Right. And it leaves the opportunity for the client and for the advisor to have more time spent on that relationship and uncovering those important things that really need to be to dealt with. Right. So there's not so much time spent trading and nitpicking investment decisions, because you've got a professional team that's doing that.
Yeah, I mean, let's face it, we're all human. We take vacations. We have events come up. Advisors do as well. We realize that people are not in the office every single day, 12 hours a day, crunching numbers. And that's the way the market works today. You have to be in front of the computer all day, every day, crunching the numbers, looking at opportunities, because it is moving so fast. Opportunities are changing so quickly in the markets. And that's really what these firms do. They can say that they have thousands of professionals, people working all around the clock, monitoring every single thing. And a lot of times at the ground floor, working maybe in China directly and relating
Right.
information on what's
Right.
going on there at the ground level. Is it different than what we've heard here in the U.S. and how to interpret that, how to incorporate that in a portfolio if we need to?
Having actual worldwide exposure,
Right.
you're not going to get, you in your living room will never get boots on the ground in front of something.
Correct.
You're not going to get that. You have to have a team, that you have to have a system and actual science to it. So if you're out there thinking, my goodness, you've watched yourself in the last couple of weeks, last few weeks, you've watched your portfolios jump up and down, and you've really gone through an emotional roller coaster as well as a financial one. Now might be a great time to actually take this as your cue. Request a portfolio analysis. We do that all the time. We will actually just give you a nice, solid review of your portfolio. We'll give you some ideas, some thoughts. We'll have a great conversation with you, and you can take that away. You can engage with us. You can share it with your own financial advisor, but don't miss the opportunity to do that. Volatility doesn't appear that it's going to be going away anytime soon.
Yes, we agree with that.
Yeah, in fact, it's perhaps going to get even a bit more of a bumpy ride. So now, sooner than later, would be a great time to have that portfolio analysis done. Luke, really appreciate you being here. This is actually
My
a very
pleasure.
timely, with all of the volatility that's been happening. It's a very timely conversation, one that I'm sure that we'll have you back to talk about some other things again,
Yeah.
if that's okay with you.
That'd be great. Look forward to it.
Awesome. So everybody, head on over to Personal Pension Radio. If you'd like to get in touch with Luke, you can just contact us there. We will put you in touch with any information that you'd like about AssetMark. We will have information available that we can just email right out to you if you have any questions about what they have available and what we can help with. Thanks again, everybody, for listening. Thanks again to Luke.
Thank you for listening to the Personal Pension Radio Podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you're there, we'd appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening.